Okay, good evening everyone and welcome to this meeting of the Governance and Audit Committee. My name is Councillor Justin Wrench and I will be chairing this meeting. Before we proceed with the main business of tonight's meeting, I would like to go through a few items of housekeeping. So we're not expecting a fire alarm this evening, but should one sound, please can members use the exit to the rear of the chamber and assemble in the car park. Please can you make sure that your phones and other devices are switched to silence, and if members wish to speak during our debates this evening, please can you indicate by raising your hand and I will come to you at an appropriate time. This meeting is being webcasted. Please can I remind everyone to use their microphones when speaking and switch them off when they're finished speaking to avoid any unnecessary interference. I will now proceed with the main business of tonight's meeting. So agenda item 1 is apologies for absence. So apologies for the meeting have been received from Councillor Lynn Jeffries, Councillor Tom Walsh and Councillor Lynn Walters. I don't believe we've had any other apologies, have we?
No further apologies that we're aware of.
Okay, Chair, thank you very much. So agenda item 2 are declarations of interest. So do any members have any disclosable pecuniary interests, other pecuniary interests or non-pecuniary interests that they wish to declare this evening? Please state the item and nature of your interest if you have any. Okay, so as there are no declarations, I will proceed to agenda item 3, which is minutes of the previous meeting. So please can I have a proposer to the minutes of the meetings from our meeting on the 5th of February? Thank you, Councillor Wright, and a seconder, Councillor Prime. So thank you. So the minutes have been moved and seconded as an accurate record. All those in favour, please indicate by a show of hands. Thank you very much, members. The minutes are approved, and just please wait a couple of moments while I sign those off this evening. Very much. So we'll now move to agenda item 4, which is public question time. Members, I can confirm that there are no registered speakers for this evening's meeting, so we'll now move to agenda item 5, which is the key financial indicators. The report for this item is set out on pages 5 to 13 of tonight's agenda, and please can I invite Phil Myers, our Head of Finance, to present this report. Over to you, Phil.
Thank you, Chairman, and good evening, members. So this is the key financial indicators up to the end of February, and also picks up the third quarter financial review as well. Before I sort of just canter through some of the key points in there, just draw members' attention that presentationally it's changed from what you've seen. So the capital, there's a capital element now that is sort of reflected in the financial review bit rather than the financial indicators. So that just aligns the way the information is being reported to yourself. So it aligns with how it's been reported to Cabinet and Scrutiny Committee when as part of the sort of quarterly performance report. So, and you'll note that there's an additional table in the appendix that just gives a very sort of high-level summary of the capital programme position at the end of the third quarter. So that aside, I think just picking up on the third quarter financial review. So I think following on from the previous 2 quarters, we are continuing to forecast for the financial year a positive outturn variance of 2.5 million at the third quarter. And you can see that summarised and a bit more detail on that in the appendix, Appendix A. We sort of look at the variances in the 3 sort of categories of staffing expenditure. So across all the services, we're forecasting just under £600,000, £598,000 underspend against staffing related budgets, which is around about just over 2% variance from that. As ever, range of reasons why we've got variances there. So inevitably, most of it vacancies. There have been some service areas that have had some restructures in the year, and you get other sort of all sorts of reasons for staffing changes, reductions in hours, and the like, to for flexible working and stuff like that. I have just noted in there, because finance is one of the areas which has, quite potentially significant underspend there. There is some sort of deliberate actions that have been taken there. There is a Department of Work and Pensions have been for some time planning to migrate housing benefit claimants, working age to universal credit. So we are anticipating that to continue and probably be completed in the coming months. So that does have a resource implication. So we have been deliberately holding some vacancies in that area and reducing hours sort of in anticipation of that change happening. I think also the change in the council tax support scheme that we introduced from April 24 has also helped, because that's streamlined the processing of that. In terms of other expenditure, the forecast is to be over budget 191,000, which is about 0.5% variance from the budget under that category. There are several areas where we're seeing forecast overspends which are listed there, and we have got some areas where we are forecasting underspends, and in particular on external interest payments that we're able to realise in the financial year. The main reason really for the I suppose the positive variance is, as previously reported, we've got several income streams that are overachieving. Treasury management, one area. Green waste subscriptions being the second main area. And then we've also seen increases in the value we were receiving for our recycling material, particularly around glass. And also from the arrangement we have with the precepting authorities in terms of sharing some of the gains that are generated from improved council tax collection, but it's also about actually not just collection, but it's actually trying to grow and improve the tax base as well in that area. So we are seeing some additional gains coming through in those areas. There's several of those areas, but members will be aware, we've actually reflected those in the 25-26 budget. So the 25-26 budget made some substantial adjustments for treasury management and green waste to recognise that some of that will be expected to continue through. There are still some areas where we've got some adverse variance on income, and the most notable of that being on sustainable development, where we're still forecasting underachievement on planning applications income. In terms of the capital programme, so our capital programme at the end of the quarter was just shy of 16 million, 15.8, and almost 10 million of that being profiled to be spent in this current what is now the previous financial year. We're in April, but in 2024-25, so just under £10 million. At the end of December, we'd actually, there'd been actual expenditure of about 3.2 million, and project officers had identified at that point about 3.6 million pound of projects that will need to be reprofiled, and the expenditure now will be expected to be incurred in 25-26. There's still a positive variance that we're projecting of just £426,000 on several projects, but again they are subject to the formal close down of some of those. The Capital Programme Board, just so the committee is aware, that the Capital Programme Board did receive an update on the position when they met on at the end of March. In terms of capital receipts, to the end of December, just over £2 million had been achieved. I think the notable thing in this third quarter were the 2 sales that were completed under right to buy. We've had several quarters where we've had no receipts under that income stream, which we received via Eastlight, and that's one of the long-standing arrangements that followed on from the housing stock transfer back in 2007. So inevitably, because of the housing market, there was a slowdown, and as I say, we were having several quarters where we were actually receiving no receipts from that source, but they have now seemed to have started to complete some sales, and there is a pipeline that would suggest that we'll continue to get further receipts now come forward in that from those. There are a number of sites that the council has already accepted offers on, but the sale of those have been delayed for the time being, mainly due to planning matters. So it's the offers were all subject to planning, and those matters still to be resolved before those sales are likely to complete. So that's the third quarter review, and then in terms of the key financial indicators, so just picking up on collection rates. So council tax, the in-year collection rate, so this is just the amount we're collecting for the 24-25 year, not including anything we're collecting in terms of arrears and the like. It's just shy of the same level of performance we had this time last year, but nothing that I would suggest is of major concern. So 94.8% is still a good rate, and compared to our peers across Essex, we still benchmark pretty well in that space. And the same with business rates, again, just shy of what we were achieving at the same period last year. And that's despite we did have some late additions to the rating list, which did increase the collectible amount quite significantly late in the year. So actually to keep collection up in those circumstances is quite a good performance at this stage. In terms of write-offs, so report on write-offs for council tax and business rates, and members may have picked up that that we have perhaps written off more debt this year than we did for the same period last year for both council tax and business rates. Again, not suggesting there's any issues there. There is perhaps a bit of a backlog in terms of reviewing our aged debt. Like all councils, we did see debt rise through the COVID period, and then we've had the cost of living crisis that followed on from that. So we have been taking some opportunity of looking at some of the debt that we've got outstanding. In many cases, the debt we're writing off is because we have to, because businesses have gone into liquidation or there's bankruptcies, and as we've mentioned before, there's been quite a an increase in recent years around the sort of voluntary arrangements that people can enter into, which effectively stalls our ability to recover debt, and then we sort of have to they agree a payment plan, and as long as they stick to that payment plan, then we can't really do anything more. We do make provision for write-offs. You know, inevitably, as if you're collecting income of this type, you're going to get some write-offs. We do make provision. What we're writing off here is well within those provisions, so it's not, let's say, not of concern. And I think, just picking up a point that Councillor He's raised with me earlier, these write-offs are shared with preceptors as well. So these are not, you know, this is not an impact on BDC entirely. In terms of other debts, again, at the end of February, 2.3 million, of which 1.3 is at invoice and reminder stage. So again, nothing out of the ordinary from what we would expect. Housing benefit overpayments still tracks at around 1.3 million. But again, there we are sort of regulated on how much we can collect of that debt at any point from individual debtors. Supplier payments, just note there, we're a bit shy of target there, but we have had some quite a lot change in the organisation, staffing changes, and so we think that's had some impact. We are looking at purchase to pay processes and to see if we can identify any ways we can streamline that process and get that indicator sort of more back on what we would expect to be achieving. In terms of the commercial units, occupancy rates remains fairly robust, in excess of 90%. So we've got 92% occupancy at the end of February, and we've got several units that were vacant that were pending completion. So a reasonable position there. And in terms of our investments, as I said, you know, a significant amount of income we've been generated, and more than we were actually budgeted. So we managed just over £78 million in the period to the end of February as an average amount, of which 59 of that we were holding in short-term investments, and they've yielded a return of around 5%. And then we still hold 19 million in our pooled funds, which is a combination of equity, property and multi-asset funds. Again, their dividends are 782,000 at the end of the period, and the valuation on those funds meant that we were holding an unrealised gain at the end of February of 4 million, just over £4 million. Now, I won't, it wouldn't be any surprise that members will be aware, obviously, the recent market turmoil that we've had will have impacted those valuations. So that is a moving picture, and only becomes a reality if we actually sell out of those investments. And then Appendix C, you've got the details of what the portfolio was at the end of February as well. So, thank you, Chair. Happy to take any questions.
Thank you very much, Phil. Do any members have any questions? Councillor Prime?
Yeah, thank you, Chair. Thank you, Phil. Just a couple of questions. Page 5, item 3.32, and it's talking about salaries. Does that include pensions, contributions, or what's being held, what we pay out? So the salary of 28 something million, isn't it? Does that include the pension contributions?
Yes, that would, yeah, yeah. So it includes the employer's pension contributions, national insurance contributions, and there will be other, what we call staffing-related costs in that budget that not necessarily specifically salaries.
Thank you. And, sorry, Chair, just a couple more, just for clarification for me, if you don't mind, sir. Page 11 on your capital programme summary. A couple of things that's springing out to me here. Paths, cycleways and other infrastructure. I thought paths and cycleways were Essex highways. And what's the other infrastructure? It's a cost of £73,000.
So infrastructure for us. So we do have some paths. So these would be paths in some of our parks and the like. Cycleway. Other infrastructure. So we do have some unadopted roads that we're responsible for, particularly around some of the commercial estates and the like that we have.
And my last one, if you don't mind, Chair, on the same programme, capital salaries. Can you sort of explain what that one is?
Yep. So so this is where we engage. So where we're engaging staff who are on responsible for delivery of capital projects, we can capitalise their costs as part of the spend on capital. So these are people who are directly delivering projects. So it wouldn't be the likes of your finance and the like who are just helping keep the records. These will be project officers that are responsible, and if we ask those sort of officers to apportion or allocate their time to projects, and then we can capitalise that, and then it's funded through capital resources rather than through our sort of general fund resources and council tax.
Okay, thank you. Thank you, Chair.
Thank you. Councillor Van Dolken.
Thank you, Chairman. Yeah, Phil, a couple of things, please. In 3.3.9, what, just for my information, what are receipts from the VAT shelter established with Eastlight? Is that to do with the sale of houses?
So the VAT shelter was something that was established when the stock transfer, and it related to the development works that Eastlight took on as an obligation. So when they took on the housing stock, they took on an obligation to invest in that housing stock. And normally, they would not normally be able to reclaim the VAT on the cost of those works. But because of the way it was structured as part of the transfer agreement, it meant that for those works, they could recover the VAT. And because effectively we worked with them to facilitate that, it's the benefit of that is shared. Now, just to give you assurance, that was a recognised scheme for stock transfers, and was specifically validated by HMRC. So we had to have it approved by HMRC that what we were setting up there was compliant with the rules around that. And so whilst they continue to do works that relate back to that development agreement that related to the original stock transfer, and there was around, if I recall, something about £25 million of works that were identified that they needed to do over a period of years, they reclaim the VAT on that, and then they share half of that back with us.
If I may,
Yep.
just, still on Eastlight, can you remind us or tell us roughly what percentage we get of each sale? If it's £250,000 or so, what would we get? And secondly, as a second part, do we have any knowledge of what they actually do with their part of that? Do they actually put it into building new stock, which I think is something which should concern us all? And if you don't know the answer, that's fine.
So under the so in terms of the VAT shelter is a 50-50, so they'll keep their 50%. Exactly what they do with that, we don't know, but obviously they will be using that for the purposes. In terms of the right to buy sales, it's on a reducing percentage, and that agreement runs to at November 2029, and every year it's a reducing percentage that comes to us. So that's to reflect the level of investment they're making in those properties in the intervening period. I don't know I can't remember the exact percentage, but we do receive right up to November 29 a substantial proportion of those receipts. So the lion's share comes to the authority. So what they do, again, wouldn't necessarily know exactly what they do with it. There are other provisions in the agreement where if they sell other types of land and property, there is a clawback arrangement where we can claw back those receipts from them unless they are reinvesting them in social housing. Yep.
Thank you. And Councillor Heath.
Thank you, Mr. Chairman. As mentioned, Phil did explain to me about the sliding scale of the write-off debt, because when I first looked at it, £650,000 didn't actually look that small to me. But when you think, what would we get, 4 or 5% out of every pound that's collected? So I do get that. So thank you for that clarification. And the other thing I did want to mention was the supplier payments. I'm really pleased that we have such a high target of paying, because especially for small businesses, most of them fail because of cash flow problems and not because of the business. So as close to 100% we can get is a target that we should aim for.
Yep.
Thank you.
Yep. No, thank you, Councillor Heath. Thank you. Councillor Ramage.
Yeah, thank you, Chair. I apologise, the fact is I'm a bit blind here because my laptop seems to have not connected up. Fortunately, I've made a few notes, but just a couple of things, Phil, if you was mine, and thank you for your presentation. Where's me? Get the technical bit going. There we go. In particular, the Whittam Community Centre. Can you tell me where we are at this at the moment? Because obviously it's a moving thing, and I just wondered what part of the project is in place now. I mean, is it the investment there, and when are they going to be putting spades into the ground, that sort of thing?
Okay, personally I don't have the detail of that, so we can obviously get that. I know that project is progressing because the issue about the transfer of that asset once it's completed, and that, as I understand, is all more or less done and dusted. So I think we are in terms of the profile of the spend, I think we're expecting that to start construction in this financial year. So exactly where we are in that, I don't know.
No, fair enough.
We can get that information and.
But as you know, it's been an ongoing project for quite a few years as such. So, and it'd be good to see it actually physically something happening. Something which you touched on earlier on is the write-offs. I mean, we're talking about 416,000 and 239,000 for businesses. I mean, some of that it relates to back years. Is this just a one-off situation here? Because it's collectively together, it's quite a considerable amount of money, and and I'm concerned that. And you elaborated on businesses going bankrupt and all this sort of thing. I mean, are we creditors as well to some of those businesses when it comes to getting some of it back? That sort of thing.
Yeah, so, well, as I said, I suppose there has been a little bit of a purge on some of the aged debt, so that's why explained that when you look at the year on, compared with the write-offs last year at the same period, it does look high, and that's just recognising the fact that there's probably some latent work that we needed to do and catch up there. So once the debt's written off, as I said, in many instances, if it's written off, particularly if people have gone into involuntary arrangement or as you say, liquidations, we will register ourselves as creditors, or we will have an arrangement where we will receive back some of that debt in instalments. And in the case of a voluntary arrangement, if they fail to comply with the arrangement in place, we can then restate the debt and then start to recoup it, seek to recover it in the normal way. And as I say, with liquidations, we do register ourselves as creditors. If a business has gone into liquidation, we will register ourselves as a creditor with the hope that we will recoup something back once the matters have been addressed.
I mean, these write-offs, are they with businesses in particular? Is it council tax? Is it that sort of thing, or is it other stuff that? I mean, obviously council tax is a factor, but is there other debts that these people would own us?
So the write-offs we're sort of referring to specifically here are they're either council tax debts or their business rates. I mean, we do have other debts that we might have with a company which is through our other income, and there you sort of see the write-offs there is just like is 16,000 up to the end of February. So probably the vast majority of what we're obviously the vast majority of what we're seeking to recover is council tax and business rates, and therefore that's where the majority of the write-off issue arises.
Sorry to harbour on this, but as far as business is concerned, is there a trend of more and more going out of business with the current climate that we've got going on at the moment?
I don't think we're necessarily seeing that. I don't think there's nothing that's exceptional that we're sort of necessarily picking up there. I think businesses are generally, as some of the COVID reliefs, and we'll see again this year, so for retail, hospitality and leisure, whereas they were receiving 75% relief in 24-25, I think they'll only get 40% relief. So we will have, that will clearly impact on businesses, business rates that they've got to pay, and on top of, I suppose, some of the other burdens that they're having to pick up with national insurance and the like. So, I think whether there is an upward trend, I'm not aware of that, but we do keep, obviously these things under review. And I think, again, just to emphasise, although they are large cash amounts we're talking about there, actually, as you say, some of that is old prior year debt. So actually, if you looked at the amounts we have collected in those years and that, you'll find that these are quite minuscule percentages of the overall amount we are collecting in total. So.
I've just made a brief note here, but unfortunately, because I haven't got the document in front of me, I made a note about the debts owed to the council was 2.3 million, and part of that was already in invoice situation. What is happening with the rest as such? I mean, we're talking about $1 million here, aren't we? Where is that as in the scheme of things? Is it just a rolling thing as such? And
so you'll see in the table, so in the report, in the Appendix B, it sort of gives you a breakdown of some of that debt by sort of recovery stage. So, some of the debt will be with sort of enforcement agents. Some of it will be what we call pre-legal, where we're sort of doing that prelim work to see whether there is the chance of being able to recover that. See, some of it is like tracing agents, so, you know, business has disappeared and we're trying to find them and that. So a lot of it is at different stages. We have got a chunk of that debt, and this will be particularly related to the housing benefit overpayments, where we've got what they call attachment of benefits and earnings. So where we've got orders in place, where again we can deduct, you know, payment against that debt against their sort of continuing benefit or earnings that they might be generating somewhere. But again, that's sort of regulated in how much we can get through that. So so it's all at various stages of.
It's just that it's quite a
recovery.
large amount of money, and
Yeah.
that's,
Yeah.
you look at the scheme of things, and I just felt it needs to be elaborated a bit.
Yeah.
Thank you for that. Thank you, Chair.
Okay, thank you all. So if there are no further questions, we've been asked to note the following two things. The first one is to report of the key financial indicators as of the 31st of March 2025, and the second is the third quarter financial review for the financial year 2024-25. So please can I take it that the report is noted? Thank you, members. So this report has now been noted. We will now proceed to agenda item 6, which is the internal audit update, including progress against the 24-25 internal audit plan. This can be seen set out on pages 14 to 23 of tonight's agenda, and I'd like to invite Angie Mitchell, our Audit, Insurance and Fraud Manager, to set out this report.
Thank you, Chair, and good evening, members. So this is the standard report that we bring to you, giving you details of the progress of work performed by the internal audit function against the internal audit plan. So there have been 3 audits completed since the last report to this committee. All of those were full assurance, and the summary outcome of those is identified in Appendix 2. There's also commentary in Appendix 2 on a number of areas which have been subject to review, but in a different way, so different source of assurance. So that relates to cyber security subgroup, health and safety committee, and data matching exercises. So again, those are summarised in Appendix 2. 3.1.4 gives an outline of other work completed by the team. The Quality Assurance and Improvement Programme update is in 3.2.1, and there are a couple of items implemented since the last report to this committee in February 2025. Those relate to training for internal audit staff on topics which are identified as key in the new Global Internal Audit Standards in UK public sector, and also publication or presentation of the Audit Charter to this committee tonight. 3.3 confirms there have been no further Investigatory Powers Act applications since the last report to this committee, and no regulation of Investigatory Powers Act applications in 2024-25 or in the current year to the date of this report. Chair, I'm happy to take any questions.
Okay, thank you, Angie. Members, do any of you have any questions for Angie this evening? Councillor Van Dolkum.
Thank you, Chairman, and thank you, Angie. Nice to see 4 chunky ones, all very satisfactory, if I can put it that way. Chunky audits, anyway, important ones. No, just a small question of detail for your other hat, your insurance hat. It says that we put out a tender for the procurement of a broker to support the 2025 insurance tender. Is that something we have to pay for? I've not come across that before. Thank you.
Yes, so the broker procurement is still in progress. We haven't reached the point of appointing a broker at this point, so I won't go into too much detail, but the evaluation is based on a combination of price and quality. So there is an expectation that we will be making a payment to the broker for each year of service. But the broker will typically also get insurance services brokerage if the insurers appointed at the insurance tender offer it to brokers. So that different circumstances.
If I may, Chairman. So the broker, he gets a fee and he gets his, I'll call it commission, his brokerage. Is that right?
Yeah, so the insurance services broker is specifically for services that the broker provides on behalf of the insurer. So in terms of dealing with the policy, administration, that kind of thing, the invoicing and so on. So there's certain activities that they undertake for insurers, but there are things that they undertake on our behalf, and running the, or assisting us in running the insurance tender is a key part of that.
Okay, thank you ever so much, members. I take it there are no further questions on this item, so we're asked to note the progress and performance against the 2024-25 internal audit plan. So please can I take it that this report has been noted? Thank you, members. This report has been noted, so we'll now proceed with agenda item 7, which is our internal audit charter. So this report is set out on pages 24 to 38 of the agenda, and please can I again invite Angie to set out this report. Thank you.
Thank you, Chair. So the internal audit charter has been updated from the previous version to reflect the requirements of the new global internal audit standards in the UK public sector. So a lot of the detail is following the recommended format that was published alongside those standards. So if we go to the charter itself, obviously gives details of the background to internal audit, the purpose, the source of the internal audit mandate, including the legislation, and the other means of giving us the authority to perform our work. There's also a summary of the arrangements relating to independence, including organisational position and reporting relationships. Section 5 gives details of the Governance and Audit Committee oversight arrangements. So these are the key aspects of your role which enable us to do our job effectively. So paragraph 5.1 states it as overseeing the independence, objectivity, performance and professionalism of the audit function to support the effectiveness of the internal audit process and to promote the effective use of internal audit within the assurance framework. Paragraph 5.3 gives further details around the specific roles that the Governance and Audit Committee take in achieving that aim. And paragraph B within 5.3 refers to the unrestricted access that I have to communicate with you and interact directly with you, including in private meetings without senior management present. So this is a standard term within the standards, it's best practice, and we've discussed the opportunity to meet with you after this meeting tonight to meet that requirement. Paragraph 6 goes into details of the roles and responsibilities of the audit manager, which includes around ethics and professionalism and objectivity. The standards and the charter reflect on the non-audit operational functions that internal audit staff perform. So 6.2.4 gives some details of those functions. And 6.4 gives further details on the communication arrangements with the Governance and Audit Committee and senior management. So there are elements of this that we're currently working on, but this is effectively setting the scene for the current year. Thank you, Chair.
Thank you, members. Do any members have any questions for Angie? Councillor Hayes?
Yeah, just a quick one. Obviously, we spoke about meeting after, and then people would leave the meeting and it'd be like a private session, but it wasn't minuted, or how do we kind of then record that it has happened to say that it is good practice? Is it just noted that we have that meeting, or?
Yeah, so I'll take outline notes of the meeting that we have, but it's not a formally published meeting.
Thank you. Do any members have any other questions? Councillor Van Dolken?
Thank you. Angie, remind me, I used to be the chairman of this committee back in the dark ages, but I can't remember. Was there a similar document, a charter or whatever? And if so, if this has taken its place, is there anything major that we should be aware of that has changed?
So a lot of the requirements that, yes, sorry, in answer to your first question, yes, we did previously have a charter as well. So it's an subject to annual review. The detail of the charter hasn't changed significantly in terms of the requirements, but the new standards place more emphasis on certain aspects of the standards. So it's a little bit more robust in terms of the expectations that there are on the internal audit function, on me, on your role in supporting the internal audit function, and on my interactions with you and with senior management and so on. So there are additional clauses in there, if you like, that are aimed at improving our independence and objectivity and performance.
It does, again, if I may, Chair, it does also say that the audit managers and staff shouldn't be involved with operational activities. Now, I was thinking about that as I was reading it, and I can understand in a huge organisation where they would have a big audit department, whereas here, it's you and a couple of other people. I know it's a different situation. It is contradictory, though, isn't it? And you do point it out in blue. Could you just comment on that very briefly? Thank you.
Okay, so anything that we do outside the normal role of the internal audit function has the potential to impair our objectivity if we're taking an assurance view of anything that we're doing. So we need to explore either other ways of performing the function or other ways of getting assurance on it. The ideal, according to the standards, is that we concentrate our efforts on internal audit. But this is an ongoing discussion as to how we resolve and maintain the best position of independence and objectivity that we can.
Councillor Prime?
Yeah, thank you, Chair. Thank you, Angie. Just a quick thing, just for clarification for myself. Item 6.24. Audit manager is one of the administrators for the council's credit card. Doesn't hold a credit card yourself. What processes are in place to monitor the use of credit cards? I mean, if somebody uses it for their own personal use and then pays it back, that shouldn't be allowed, of course. I don't know, can be seen as a bit of a fraud, but what sort of checks and balances we got in place there?
Okay, so interestingly, we're just in the process of rolling out a new credit card system with different approval arrangements for transactions. So I think that will probably best answer a lot of your concerns. The old credit card system is now stopped, apart from the final processing of the payments and the paying of the bills. So that should help. my role with it was purely administrative in terms of the cards, the users, liaison with Barclaycard and so on. So the council has separate arrangements for oversight of the spend on the cards and the reconciliation and so on.
Thank you. Okay, if there are no further questions, we have been asked to approve the updated internal audit charter. So please can I have a proposer to move the recommendation? Thank you, Councillor Prime. And a seconder, Councillor Ramage, thank you. So members, the recommendation has been moved and seconded. I will now put this to the vote. All those in favour, please indicate by a show of hands. Thank you, members. That is unanimous and the recommendation has been approved. We will now proceed with agenda item 8, which is the external audit plan and strategy for the year ending the 31st of March 2025. And this report is set out on pages 39 to 72 of tonight's agenda. So please can I invite Emma Larkham, the Director at KPMG LLP, to present this report. Welcome to the meeting, Emma.
Thank you, Chair. So thank you. So what we've got today is our draft audit plan for the year. So we will finalise this once we've completed a few more bits of our planning and the value for money risk assessment and just bring it back. But I'm not expecting what you see today to change fundamentally. So in terms of the report, I'll take it as read, but just go through a couple of key pages for you. So I'll go first to page 43 of the pack. This page here is just setting out our materiality levels that we're planning to plan our audit procedures to. So these are currently based on the prior year numbers. We will update these when we get the year-end position. And in terms of the thresholds that we use, so we've used 2% of expenditure. That is consistent with what we used last year, and we've currently used 65% to our we call our sort of tested materiality, so where we design our procedures to, which takes us to about 1.1 million there. We'll keep that under review in terms of those percentages and thresholds, as we go through the year-end audit later this year. And in terms of the 89 or just under 90,000 there, that is the level of which we would report any errors back to the committee. So anything we identified over 90,000 we would report to the committee. And then if I then just go through to page 45, this slide sets out our risk assessment based on the work that we've completed to date and where we consider there to be audit risk. So we've identified 4 areas there which are what we call significant audit risk areas. Those are those areas where there is a potential for there to be sort of error or fraudulent behaviour within those areas. So if I just take you through each of those. So the first one we've pulled out there is around the valuation of land and buildings, specifically around the market value, existing use value element of valuation of those assets. The reason that this is pulled out is that there will be a full valuation this year, so therefore we'll have a look at that, and that's consistent with how the council completes their valuations normally. But with anything such as a valuation of land and building, there's a lot of estimation and judgment involved in those valuations. So it doesn't take, if you think about if one of those assumptions was to move just slightly, it might not take a lot for that to result in a material difference. So we'll have a look at the valuer that you use. We will use our own internal valuers, specialists, to have a look and challenge some of those underlying assumptions, and then make sure that we're comfortable in terms of the underlying data, so aspects such as floor areas and things that we're comfortable with. I will say this was one of the areas that we didn't look at last year under the disclaimed audit, but I am expecting us to be able to complete the vast majority of this work, if not all of it, this year. The second significant audit risk we've got there is of a similar nature, but is around the investment property portfolio. So again, making sure that we've understood that methodology and the valuation assumptions underlying the valuation of investment properties. Then we've got the third audit risk, which is the management override of controls. So this is a significant audit risk that you will find on absolutely every single audit, no matter what the sector. And it is the risk that management are, if they so wished, in a sort of that unique position to manipulate controls, and therefore we design procedures to test against that. So particularly around things like accountant estimates to understand if there's any bias within those, looking at areas such as journals where there could be potential manipulations of positions if that was to be done. So we'll design appropriate procedures and test over those ones. And then the last significant risk area we've got currently is around the valuation of the pensions liability. So again, similar to the valuation of properties, the pension valuation is an area where there is significant sort of estimation and assumptions within there. So we have a specialist pension team who will complete our work over the pensions valuation. And this was something that we did complete last year, so I'm expecting the team will be able to build on the work that we did last year, particularly around sort of understanding those assumptions and judgments. And the last risk, which we've just pulled out, which isn't currently, is just sort of another area of audit risk, so not a significant audit risk, is around the valuation of land and buildings. So we've essentially separated out your property portfolio into the various valuation categories. We consider the valuation of land and buildings which are valued under depreciation replacement cost to be less risky because that methodology has less assumptions in it, has got sort of less estimation, so therefore we consider the risk of error over that to be reduced compared to those other two areas. And then just on page 11, so within, so 11 and 12, so within the auditing standards, there are a presumed sort of rebuttable significant risk areas, so areas where the auditing standards suggest that there could be risk in most cases. So for most organisations, sort of private and public sector, that is around sort of the revenue assumption. So on page 12, I've set out the reasons why I don't consider there to be any potential fraudulent risk around the income streams, and that's really due to the nature of those streams. We consider in the public sector expenditure, so on the flip side of where from a private sector perspective income revenue is where you might expect there to be some sort of manipulation because that's sort of the focus of organisations, profit driven. In the public sector, we consider that risk more around expenditure, so the control of your expenditure to be where there could be manipulation if there wanted to be. For Braintree, we don't consider there to be a risk around that expenditure, so we've looked at the controls you have in place, the nature of your expenditure, and again considered that there is no real fraudulent risk around that expenditure. So we haven't currently got an expenditure or a revenue fraud risk. And then if I just jump through to page 56 and 57, this is just setting out the approach that we will take for value for money, which is consistent with what we did last year. The one thing to note on value for money this year is that there is a change to the reporting timeline for our some of our value for money reporting, in that we will bring to you by the end of November our annual audit report, which will have our sort of more formalised commentary on value for money, and that's just been brought forward under the new NAO guidelines. We have yet to complete all of our value for money risk assessment, but we will bring that to you once that's concluded, probably at the next audit committee. And then just in terms of the appendices, if I just touch on briefly on the audit timetable. So we are obviously still working to a backstop for the 24-25 accounts, which will be to the end of February. I am expecting us to have completed the vast majority of our audit work probably by Christmas, but with the reporting to come in the new year, so in that sort of January, February time, which will be hopefully a more aligned timetable with what the finance team have been used to historically. So we've already been in and completed the vast majority of planning work, which is significantly earlier than what we'd done last year, and we've also got the times booked in for the summer already with the team to be able to come in and do that work. So we are starting the process of getting back to a more normal sort of audit timetable. We will do work this year around rebuilding of assurance where we are able, and that is sort of still developing in terms of the amount of work that we'll be able to complete, but that we'll sort of report back to you as that sort of develops. And then on page 62 is just the confirmation of the audit fees, and page 63 is just the confirmation of our independence to the committee. That was probably all I was going to cover, so happy to have any questions.
Yeah, you mentioned about valuations on property. Is it clear that there's two bodies, i.e. us and yourselves, will do a valuation? How does that work?
So we don't do a valuation. So I have a
You
valuation.
have representatives.
I have a valuation specialist who I utilise to help me challenge your valuation. So I am not a valuation specialist.
Us. We do a valuation
You
as
do,
well.
you will, yes.
What happens if it's quite a gap? Who comes where?
So if we've had this situation before, but generally speaking, what we would approach a valuation error. Well, we would never have necessarily errors in terms of valuation assumptions. So there is always a degree of estimation and judgment involved in those. So what we would tend to do is we set a sort of a range to say we would expect your valuation or your assumptions to be within this range. If your assumptions land within that range, albeit they could be at the end or they could be at the top, so you could have a material number potentially that is different, but we're comfortable with that range, then we wouldn't report that necessarily as an error. If we felt that there was an incorrect assumption being used, so i.e. we had, and what we have seen sometimes is maybe we've got broader market understanding and we would say actually our view is that this assumption is maybe not quite the right assumption for you to have been used, I would go back to your valuer and ask them to understand why that they've got to that reason. So it's a definitely valuation. If we get differences, it can take a little bit of communication between our two specialists to come to a conclusion. But there is absolutely an acknowledgement of that there is high levels of judgment involved in these areas. So we're not expecting to be exactly the same.
I mean, do you take in consideration market values, valuations?
Yes.
Because obviously, like everything, it goes up and down, doesn't it, as such, you know? And,
Yes. Yeah.
yeah. One other question, Chair. You mentioned about the current situation where you're coming in early and you're going to come in. But could I ask a question, what has happened on the back years, which has been a bit of an old chestnut in that sense? Where are we as far as the audits for the last 2 or 3 years? Because I haven't seen anything in the notes about it tonight. Thank you.
Phil, did you?
Yep, so in terms of the prior years, so you may recall we did have an extra special meeting of this committee which addressed the outstanding years that we had with BDO, and that was for the 22, 23, 21, 22, 20, 21 and 19, 20. So 1920 they issued an unmodified opinion, so that was all signed off fine, and they did the same for 2021. They provided disclaimed opinions for 21, 22 and 22, 23. So that was all sort of brought to the committee at that time, so they brought their relevant reports, and then and that was ahead of the backstop. That was ahead of the backstop date that we had to achieve, which it's all blurring now, but I think December, wasn't it? It's a December one. So we had that meeting. I think it was late November or around November time, and that was all addressed at that point. And I think their final reports were sort of issued out to the committee following them signing off the accounts. So I think that was all done and dusted. I think the only thing outstanding on that is finalisation of fees, which we're waiting on the public sector appointments body to sort of prescribe what those final fees will be for, recognising that the final 2 years they didn't do a full audit. And then 23-24, I see KPMG brought that along as a substantially completed piece of work, but because of the prior year positions, that was also a disclaimed opinion on those accounts. So I think we're sort of up to speed and we're compliant with all the backstop dates.
The noises that are coming out from Emma sounds like we're back to some sort of normality almost, which is good. And this is why we want to go carrying forward.
Okay.
Yeah.
So I think in terms of the timeline, we are slowly moving forward in terms of the approach. So the backstop date for this year is February. So remains the same. Next year it will come a bit forward. I think it's January, and then it will come into sort of the pre-Christmas. What I think, just to be clear for the committee, is that this year will not be a clean audit opinion. That disclaimer continues because it takes time for us to be able to work through a disclaimer, particularly around reserves, where we've obviously got a number of years where we haven't got comfort over that sort of reserves position. But that's what I was referring to in terms of building back assurance work. We will start to do some of that this year and into next year, and then hopefully within sort of the next 3 years we will get to a clean, unmodified opinion again. Is the expectation.
Thank you very much. Anybody else got any questions for Emma this evening? Okay, thank you, members. We are asked to note the external audit plan and strategy for the financial year ending the 31st of March 2025, and please can I take it that this report has been noted? Thank you very much, members. The report has been noted. So this item concludes our business for this evening. The next meeting of the Governance and Audit Committee is scheduled to take place on the 9th of July. Thank you for your attendance this evening and those watching via the Council's YouTube broadcast. I will now be closing the meeting of the Governance and Audit Committee at 22 minutes past 8. Good night to all.